Hello everyone, my name is Financial Charles and welcome back to another Bitcoin video. Today is August 12th of 2023 and Bitcoin's price is at 29,404. So it's about the same exact price as it was yesterday. As you can see here over the macro scale, we're really just in this channel of very low volatility, and you can see that also here in the Fear Greed Index. No one's really too greedy, no one's really too fearful. We're right in the middle, and that kind of corresponds with this low volatility that we're seeing right here. But today's video is going to be about dollar cost average strategy, and we're going to be using Benjamin Cowen's his DCA Simulator that he just released on his IntoTheCryptoverse website. Pardon me, and I'm not going to edit out the burps. But anyway, we're going to be looking at how you would have done if you just dollar cost average $250 a week versus lump summing everything. So obviously a dollar cost average is when you buy an average amount over a fixed time. It's like you're buying $200 a week of this, $200 a week of that, instead of putting all $5,000 in at once, is what I'm trying to say. And a lump sum is if you have all those $5,000, you just put it in all at once instead of spreading it out over 5 months, if that makes any sense. So where I want to take you to is the very top of 2021 when Bitcoin was at $69,000 up until today. This blue line represents a dollar cost average strategy. So this means with each of these little dots that you see here, that represents you buying $250 of Bitcoin that week. Obviously, this orange line is both the Bitcoin price as well as the lump sum figure that we're going to be looking at. The y-axis is just the portfolio value. It's not the value of Bitcoin. And then this green linear line is the amount of money that you put into the market. So as you can see, over time, $250 a week over the past almost 2 years already, you would have put in $22,750 into the market, and had you dollar cost average, which is this blue line right here, even if you started buying at the very, very top and you just kept on putting in $250 each week, the bottoms would have made up for when you buying at the high. So right now you'd be up over 10%, and if you are familiar with the S&P 500 index, over its history, it has returned 7 to 10% a year. And what we're looking at right here is a Bitcoin bear market. This is a bear market. This is going from the very top all the way until now, from the high all the way to the low. And it found its low here. It might test it again, we don't know, but it's starting to slowly creep up. Right now it's about 2x what it was down here. Down here is about 15,000. Right now we're at about 30,000. And yeah, had you dollar cost averaged everything and just be patient and not capitulated or sold or paper handed or anything, you'd be up 10%. And obviously, had you lump summed, if you just had $22,000 in November and you put all $22,000 in there, you'd be down 59%, which is the danger of lump summing during a bear market. So I want to show you, during a bear market, it is the best strategy to simply dollar cost average, so that way the lower the market goes, your $250 that you're putting in per week, which is about $1,000 a month, the $250 is buying you more sats each week. So that's a good way to look at it in terms of when Bitcoin is going down, you're able to stay focused on the goal. You're not scared of capitulating. You're not scared of, everything is a scam. You see it as an opportunity to accumulate more sats. And let me show you something pretty interesting. I'll take you back to 2020, even just 1 year before. So obviously, November 2020 Bitcoin, I believe, if my memory is correct, it was about $15,000 here. Because this is about $15,000 right here. So obviously it went up, then down, then up again. Obviously, had you lump summed everything here, you'd have more money with the lump sum. You'd be up 85% compared to the dollar cost average. All right, dollar cost average, you'd be down 2% over the course of 3 years. But obviously, and I know that's not a good look, but you're not in this asset class. Hopefully you're not in this asset class for the short term. There's just a lot of long-term potential. And obviously, if we just go back to this chart, this is the Bitcoin chart ever since its inception. If you ignore all these dips over the macro scale, it's up and to the right. And the reason is because there's only 21 million in circulation and there's unlimited dollars. So you're dividing unlimited dollars, you're taking unlimited dollars divided by 21 million fixed units. So the more dollars are in circulation, the number grows. Let's go back here, and this is over a longer term time frame, 3 years. You'd be better off lump summing. If we go all the way back to, let's say, 2017, this is almost the peak. The peak in 2017 was about $19,000, and had you lump summed from the very beginning, even here, you would still be up. Or let's get even more accurate. This is the very, very top of the 2017 run. Yeah, you'd be up dollar cost averaging. So, even over a longer period of time, you might still be better off dollar cost averaging, and that's because, Bitcoin back in November, it was about the same price as this 2017 all-time high. And I believe in terms of Bitcoin's history, that's the longest that you could have went being underwater. So, December of 2017, you go all the way to December of 2023, right? 2022. That's about 5 years, and you would just have broken even. So if you bought here and you held and you didn't even buy, you never bought any of this, you just bought it once and you held up until December 2023, you would still be just break even. But, so that's the first time in Bitcoin's history that it's done that, and, it might do it again. It might just do it again. So you always want to be prepared for that. Let's get back here. So obviously here the dollar cost average strategy would have, trumped the lump sum strategy, and the reason is because you're canceling out this $15,000 buy with a $3,000 buy right here. And then obviously the coronavirus dip, which was another $4,000 buy. So, that's why that this DCA strategy is outperforming the lump sum strategy. You'd be up 154%. Your $74,000 would be worth about $200,000, whereas if you lump summed, it would be worth about $125,000, which is still more than $74,000. So you're still up over this time frame of, this is almost going to be 6 years right here. But even over the longer term time frame, let's say a 9-year time frame, it's a no-brainer. It's a no-brainer that if you just lump summed everything into Bitcoin, your lump sum would be higher than your dollar cost average strategy, because your dollar cost average strategy, even though you're buying, well, not only are you buying the highs, but even if you're buying these lows right here, these lows they're not as low as what the price was back here. And that's another dangerous thing about waiting for a low, is that it might never come. Here, I remember in November and December, sorry, I keep hiccuping. In November and December, we were all the way down here at $15,000, and everyone was calling for 10K, which was this range right here, and 10K never came. So had you not bought here because you were waiting for 10K, you would have missed out. The train has left the station. But, even here, oh man, what am I trying to say here? If you bought all of this here, if you dollar cost averaged all the way like here, that's fine. At the time though, you would have thought it was a bubble because it just broke its all-time high and it's going up like crazy. But even if you're still dollar cost averaging here, that's good, because you never know. Like in hindsight, but back then you had no idea that you would never see these prices ever again, because the very next bottom was 3,000. It never dipped to this level ever again. So if you're buying on the way up, that's, as long as you're not capitulating, as long as you're not buying all the way up and then you capitulate down here, it shouldn't be too much of an issue if you just buy and hold forever. Obviously, like even if you bought this peak and this peak, and you kept holding, you'd be up. So eventually, even if you bought this peak, you'd be up. As I said last video, all-time highs usually, Bitcoin usually revisits the all-time high 3 years later after it was hit. So this was December 2017, and it revisited that $20,000 range December of 2020. Down here, November of 2013, it reached that same range about here, December 2016, about 3 years later exactly. and then obviously the next all-time high was about 4 years afterwards. So that's why, you know, in my last video I was saying, if this November 2021 was last peak, that means we could probably assume, or we can, you know, it's really dangerous to assume, but, you know, we can guess that Bitcoin will once again be at that all-time high around this exact point right here, November of 2024. And then wherever Bitcoin goes from there, it might peak out November of 2025. And I'll make another, probably up here, and I'll probably make another video discussing a dollar cost average out based off time instead of price. That's going to be another video that's going to be coming up. But right now I just want to talk about the you know, dollar cost averaging over time versus lump summing. Back to, you know, this point right here, the point I'm trying to make with this chart is the longer time goes on, the lump sum always wins. The lump sum always wins. Besides that one exception that I showed you here in December of 2017 and you held for, you know, the 5 years, that's the only exception in Bitcoin's history, and perhaps this might repeat again. Perhaps this might repeat again. So maybe it is in your best interest to dollar cost average, but yeah, I mean, a lump sum is not even, if you had $74,000, right, like this is suggesting, yeah, you could go all in and lump sum it at whatever price point you want, but every dollar that you make after that, what, are you just going to not put it in Bitcoin? No, you're going to put it in Bitcoin if you know what's good for you. So even if you're lump summing large amounts of money throughout your lifetime, you are simply dollar cost averaging. So, you know, you could have $50,000 in cash and put it all in Bitcoin, and now you could call that a lump sum, but next week, once you get your paycheck or something, boom, you have another amount of money, and now you're just going to put that into Bitcoin, and then the next check into Bitcoin. So over your lifespan, you're just dollar cost averaging. Me, I dollar cost average. I mean, technically, you know, I dollar cost average every, you know, 2 weeks when the paycheck comes, but I lump sum the whole check. I lump sum the entire check. So, you know, in a way it's a lump sum, but in a way it's dollar cost average. But, you know, over time, in the grand scheme of things, it doesn't matter if you're lump summing or dollar cost averaging. It doesn't matter, because, you know, all the way back from 2013 up until now, which is about 10 years, this is a whole decade, and this is, you know, this is what your time frame should be, you know, at least 10 years. If you're an investor, you invest for decades. If you invest less than 10 years, you are simply a trader. You know, so, you know, this is over 10 years, $250 a week, that's about $126,000. If you lump summed it, that's $4.6 million. If you dollar cost average, that's $3.3 million. At the end of the day, it's multi-millions. So, you know, you can't really complain. In terms of, you know, human psychology, the dollar cost average strategy is more peace of mind, because you don't have to look at the price and you don't have to be affected by the price, because you know that no matter what the price is, you're still going to be buying in. So, you know, dollar cost average is, you know, simply the way to go. But, you know, if you, I mean, I'm a lump summer, of course, but yeah, I mean, let me move on from that point. I think that's everything I wanted to talk about today, because I didn't want to make this video too long, and yeah, I have limited time for my break. I'm making this during my break right now, so, you know, I'll make another video tomorrow. I'm going to be making Bitcoin videos every single day. I don't want to drag this one out for too long like I did the last video. The last video, I watched it back and I was simply rambling about nonsense and not even finishing my points and jumping from one point to another, so I didn't want to do that with this video. I understand that I may be talking a bit fast, and hopefully over time that won't be too much of an issue, but you know, as I make more videos, it'll get better and better. So I will see you guys tomorrow.